VIjayalakshmi Iyer, Chairman and Managing Director of Bank of India, joins us. Ms. Iyer, good morning and thank you for joining us. Looking at the inflation in the IP numbers, do you expect a status quo by Reserve Bank of India in the Jan policy?
Yeah, certainly. Even during the last monetary policy review, RBI had announced that they would look at the inflation figures that would come as of December, and accordingly they would take a call on the policy rates. Now that the inflation numbers have come quite quite as expected by all of us, I am sure RBI will maintain a status quo.
Ms. Iyer, your outlook on interest rates over the next 3 to 6 months. If the RBI hikes rates, will you as a banker hike your deposit as well as lending rates too?
If the RBI doesn't hike the policy repo rate, of course, we will have to look at the liquidity condition. Of course, as of now, the liquidity condition is quite comfortable and easy. We will take a call overall, but there is no case, at least for hiking up immediately the deposit rates. Of course, the overall the growth rate in the deposit has also not been very encouraging as it used to be a year back. We are finding it difficult to mop up the CASA, and the expectation is that overall the growth in the deposit may be around 14 to 15% for 2013-14. Immediately, of course, I cannot take any call whether we'll be hiking the deposit rate. We will wait and watch and then look at the position.
So the credit growth may be sluggish, but bond yields have cracked to a 6-week low, way below 9% now. What does this mean for your bank, and what will this do to your treasury book?
In fact, with the liquidity condition easing out, the yields are softening, in fact. And our treasury book, there is no greater hit on the treasury book from during this quarter, in fact. So that's quite all right on the expected lines.
Innocent Bank did report some stress as well in its asset quality. How do you see the asset quality stress at an overall system level? Which sectors, according to you, are going to show continued stress?
In the backdrop of the economic slowdown during the last couple of years, banking industry is, of course, witnessing a concern on the asset quality, and we are also not an exception to that. In fact, during the years 2011-12 and 12-13, the entire banking industry saw an increase in the NPA levels as also in the restructuring advances. It's only during the current year, during the last 2 quarters, we have been able to contain the NPA levels. Of course, it depends upon the bank specific issues, and certain segments like, of course, like infrastructure or iron and steel, we have an issue. I mean, the banking segment must be experiencing some issue. It depends upon the concentration risk a bank has got to these specific sectors. But overall, as far as Bank of India is concerned, we have been able to improve the NPA ratios, both gross and net NPA. Slightly we have been able to lower down, and we hope in the continuing quarters also we will endeavor it to maintain. All the banks, in fact, have improved the monitoring mechanism, as also the recovery climate has improved because of the effectiveness of the recovery efforts at all levels. We are seeing some recoveries at the lower end of the segments like retail and small business and medium enterprises. We have been able to improve our recoveries, and public sector banks have also started, in fact, of asset sale also in small measure. We are also testing that in the market. So overall, I think we should be able to contain the NPA levels at the current levels. Of course, going forward, all of us are looking for an uptick in the credit pickup as also better investment climate. So maybe post 2 quarters, we should see the credit pickup and also the stability in the earnings of the corporates, which should help actually the reduction in the NPA levels.
Good. Ms. Iyer, but Bank of India positively surprised on asset quality in last quarter. How have slippages been so far? I mean, are things looking stable? And what kind of NPAs have been sold to asset reconstruction companies?
The slippages have been stable. In fact, we should be able to maintain the asset quality at the current level. Of course, we have also effected some asset sale also. In fact, since we are under audit, I would not like to come out with any specific numbers. We should be coming out with our results in the last week of the current month. So one has to wait for what would be the gross and net NPA levels and also our recoveries.
The management recently also, Ms. Iyer, stated that the restructuring pipeline is about 1,200 crore rupees for the third and fourth quarter. How much has the bank restructured so far, and are we on track?
Restructuring pipeline, I did estimate around 1,000 to 1,200, but I think for the current quarter it should be, not for the current quarter, for the third quarter it should be lower than what I had estimated. And for the fourth quarter, which is now going on, the restructuring pipeline may be around 1,000 to 1,200 crores.
So media reports reported that PSU banks are likely to get more government capital funds for pushing consumer loans. What is your take on this, and what kind of additional capital that you may receive by government on this front?
Yes, that is the actually effort on the part of the government to boost up the consumer products, and all of us have put in place the required incentive structure also to boost up the consumer loans. But what we are really witnessing on the ground is that we are really not seeing much of an uptake for the consumer loans. The capital, extra capital which the government intends to give is directly proportional to what we have estimated to increase in the consumer loan segment. I think we may be falling short in that respect.